Well, hello everyone. This is Ryan Mallory for SharePlanner.com. Today is December 12th, 2013. Like always, I try to do at least one video a week. Usually it is only one video a week, but I've always been more of a guy that likes to type out my thoughts, I guess. But maybe as I get more savvy among other things, I'll try to do some more videos in the future, but for right now it's about once a week. I try to focus that on Thursdays and just basically give you an idea for what I've been doing throughout the week, the trades that I've seen, the market action, what kind of feel I'm getting for it, and just some of my plans going forward, as well as going through some chart setups, some trades, etc. Let's just go ahead and start off first off with the S&P 500. And here you have a double top that is definitely confirmed, and we are trading below it right now. So that's a black eye for the market in the short term. However, and this is what this is basically what kills us from being able to short the market anytime we see this kind of weakness come in, is that these sell-offs, they're nothing more really than an opportunity to buy. And I know I'm just sound like a dip buyer and all that stuff, but that's what's working in this market, and you have to do that. And it's kind of like you're blindly buying in a sense. I mean, I don't like using that term, but 6-7 years ago, I'd probably be holding a full portfolio of short stocks, which I'm not doing right now. I don't have a single stock. In fact, I just bought a stock, which I'll get to in a moment, but this market just doesn't ever seem to bode well for shorting. And when it becomes very obvious that you need to start shorting stocks, or when the support starts breaking, that's when the rally starts happening. So, perfect example, a lot of people started shorting stocks back on the 7th of November. Okay, we had a huge sell-off, much like what we saw yesterday on the 11th. And then what do? We bounced hard the next day. Now, we're not getting that bounce right now. I mean, we still have two and a half hours of trading or so left in the day. So I mean, that could happen. I mean, not to that extent, but we could see a day where we finish in the green. We're only 4 points away from that right now. So don't put that past the market. But the case in point that I'm trying to make here is that when it gets really splendidly obvious that you need to short this market, that's when it bounces hard. Now, like back here on, I think this was October 8th, yeah. We had a huge sell-off too, where it broke below those little area of support after our previous sell-off too. So this looked like the second leg was starting in this market. Like, okay, we have the first leg here, followed by some consolidation. Boom, we have a second leg starting up with a very decisive sell-off. But instead of getting a more selling, we formed a little doji candle, almost like what we're trying to do today, and we're off to the races. I mean, literally after that, I mean, it was 1, 2, 3, 4, 5, 6, 7, 8, 9, like 9 out of 10 straight up days. Okay, 9 out of 10. That is very difficult to do. So we had it again, June. Okay, huge sell-off. We're creating new lower lows and everything else. People getting sucked into the short side. They're worried that they're missing something. They're selling all their longs. We tried to bounce. We sold off a little bit more, and then 2-3 days later, we're off to the races again, buying. So here again, April, off to the races. So I hope I'm making my point pretty clear. I mean, I can go all the way back to December or November of last year. You can see, I mean, these sell-offs are nothing more than opportunities to buy the dip. And I wish it wasn't that way. I like shorting stocks, okay? And I think about 95% of my picks this year have been stocks to the long side. I've had some success shorting stocks this year, but it's, I mean, the better opportunity is really just to wait for the long setups to come back to you. And today we're seeing a little bit of that, okay? So before I get to those, I want to point out one more thing that one of the subscribers in the Splash Zone pointed out today. And that is a similar price action that we have seen over the last few months. So if you look at this 3-day price action here, okay, 1, 2, 3, sort of a incrementally stronger looking sell-off. You had the same thing over here where you had a pretty strong sell-off here, and then a huge pop here the few days thereafter. So you're kind of getting like a similar price action, which makes you wonder here with the Russell being in slightly in the green, are we going to get another pop off of the lows here after a 3-day sell-off? And so this pattern, I mean, kind of got that pattern going back here in April. So it's something that you want to be concerned about, okay? You know, what we saw here in October and then again here in November, where these sell-offs just get big and then all of a sudden, boom, a huge candle and a much bigger run to new highs. So keep an eye out for that. While the market feels very bearish over the last few days, I think we're down like 8 out of the last 10 trading sessions in terms of what the S&P 500 is doing, 8 out of 10. But we're not even down 2% in total, okay? Now, if we were up 8 out of the 10 days, you think we'd be only up by less than 2%? I don't think so. I think we'd probably be up 3 or 4, maybe 5% in the markets, okay? But the bears have had 8 out of 10 times where they have finished lower on the day and we're not even 2% off of our closing highs. Something to think about once again. With that said, let's look at my first trade here, BIDU. I actually just did this one not too long ago, okay? Today. And we got in around 170.91, I believe it is, so we're just barely scratching a profit right now, but I'm not expecting to conquer the world right away with this stock. But what I like about it, because we got in around 169 last week with BIDU, or maybe it was earlier this week, I can't remember the date exactly, but we got in when it was just really breaking out hard, and we tightened up the stops, and we got out at like 175.88. Now you can say, you gave up some of your gains from like the 180 down to 175.88, but I really wanted to give this stock as much opportunity to continue to move higher. So we booked a good 3.7% or so on the trade, and we move on to the next trade. Okay, now fast forward to today, we got out of BIDU yesterday. Now we're looking at a stock trading at 171.11. We get in at 170.91, and it gives us a good chance to play this 10-day moving average where the stock has notoriously bounced off of in recent weeks, and see if we can get this thing to move back to 182. So it's sort of like what George Costanza would do, is he's double dipping and he's proud of it. So we're kind of like double dipping in BIDU here, and getting in right near where we got in before and trying to push it back to new highs yet again. So BIDU, I like the trade. We were putting a stop loss not too far below it, and we can keep the risk, about 3% keep it about a 3% stop loss, and not risk that much. And even if we get stopped out, we're still net positive on those two trades. So that's a good thing as well. Let's look at a few more trades that has caught my attention today. These are trade setups that that I really like to point out in the Share Planner Splash Zone, which is a paid subscription service, but you'll make your money out of it, I promise you. If you follow the trade setups, follow our rules and everything else. I mean, we automate our trading. Okay, nobody automates trading services that are flawed. So, I got a pretty good. Well, some do, I guess, but I can assure you, I wouldn't be automating a trade service that was crap. So, yeah, so you can automate my picks. I don't trade like penny stocks or any crazy $1 stocks that have like a 30-cent spread on it that you can't get in at or near my price. So, stocks like BIDU, stocks like BC. I mean, these are kind of stocks that I trade, and they're very easy to duplicate the success of. Okay, and I'm not gonna hide and say I don't have losses or try to act like that doesn't happen, because I do. I would say probably 40+% of my trades are losses, so I'm right about 55% of the time. But the magic to my trading isn't in how many trades I'm winning or losing. It's how I'm managing the risk on each of those. So if I'm keeping, my average loss somewhere between, like 1 and 2% per se, and then I got winners that are getting, 3, 4, 5, 6, 7, all the way up to 10% or more, then you're got a scenario to where your profits are just way outnumbering your losses, and so that's what we offer in the Share Planner Splash Zone. where was I at? BC, okay? So this one was discouraging, okay? Because we got stopped out of this one yesterday, and we had this nice breakout in it. We got in the day before. I mean, this thing was just looking meant for a huge run, okay? And then it does this thing here, okay? We were I was a little bit concerned about this evening star-like formation here that was forming, and it did confirm the next day. But I truly believe that if it was worth holding another night, if it could hold that 45.80 level, which it did not do. We ended up, I think, getting stopped out around 45.68. So we did not see the wrath of this whole sell-off here. We got out, kept our stop loss tight, and but today you can see it's bouncing back out and it's breaking out again. So you're thinking, it's not the cleanest of charts, okay? But you definitely have a breakout opportunity here. You can probably keep the risk pretty tight. You know, put it somewhere around 44.31 or something like that, and then try to ride this thing back higher. And so I've got this one under some pretty strong consideration. I just don't know if I'm going to pull the trigger on it yet. And looking at some of these other trades we've got going on here, let's look at AGCO. This is another one. Got stopped out of it. Actually, we did not get stopped out of it yesterday. We closed out our position on this just a few days ago, because what happened was this thing was trading way outside the Bollinger Bands, okay? This is, I'm glad we're going over this one, because great case in point. See how this thing was way outside the upper Bollinger Band? And by the way, I guess John Bollinger doesn't like me using his term Bollinger Band for some reason. He keeps sending me emails like once a month saying, quit saying John Bollinger Bands unless you're willing to say Bollinger Bands trademark or something like that. Or if it's in text, he gets all offended if I don't capitalize them. So, John, this video is for you. But in any case, though, let's just call them bands, okay? We'll because you can't own a standard deviation of the 20-day moving average, and that's basically what he's trying to claim for himself. I mean, it's a useful tool that he discovered, but he can't own a math equation. So, alrighty, so it's trading outside the upper Bollinger Band. So what, or the band, whatever you want to call it. What has it done in the past when it does this? Well, it's not always that great, okay? Let's see here, and that's my cell phone going off. I always forget to turn off my cell phone. Here's a good example here. Back in April, it went way outside and it had a huge sell-off the next day. And it's done it a few times before. I mean, you can see here where it's sneaking out, and boom, it has a... I gotta quit using that boom word too. Way overused expression in the trading world that I literally hate, because it has connotations that scammers like to use in terms of trying to suck people into their services. But gosh, I am on a roll today, man. I'm sort of a Debbie Downer, I guess. But you can see that when this thing gets a full body outside of the upper Bollinger Band, another perfect example, August 5th, 2013, it has these huge sell-offs that happen the next day. So this day here, we got out when it was selling off like this, and we avoided this whole sell off the next day. And so AGCO outside of the AGCO, outside of the upper band, is a bad thing. And but right now it's actually setting up beautifully as a new trade. So this is probably second on my list of trades that I might want to take today, depending on how this market cooperates into the close. I don't want to get in all my trades at once, because it goes back to that theory: don't test out the water in a pool with both feet, because you'll sink to the bottom. So I got into BIDU, and I might get into AGCO, and I might get into another trade, but I want to sort of stage it out some, because if I'm wrong about this market, I don't want to be long, 50% long. I'd rather just be 20% long like I am right now. All right, so that's AGCO. Let's look at KKR. Never traded this one. I might have traded it in the past, but I haven't traded it recently, okay? And this is another great setup. It's barely up today, kind of like with the, the Russell, basically. And it's pulled back to this breakout level. This is one of my favorite setups, okay? The initial breakout followed by a pullback to the breakout level, and then you can get that thing back up to like 25s or so. It can make for a great trade. So here's what I'm looking at. I've got into Baidu. I'm looking at KKR. I'm looking at KKR. I did not say anything else. AGCO, and then possibly BC. It's not the cleanest of setups, but I see what it's trying to do. Now, a couple more charts, and then we'll wrap this show up. Apple. Now, we bought this breakout here on, I don't think it was that day. I think it was back on the 25th, okay, of November. And it did great for us. We think we sold out like 554 or so. So it's higher where we got out. But look, it's doing a similar breakout pattern. So I'm getting excited about Apple. This is on the high on my watch list right now. If this thing can break out, like it did in similar fashion, we might be seeing 580, 590 in pretty short order. So this is one that I got definitely on my watch list right now. And then finally, Google, or as the guy in the Internship movie with Vince Vaughn and Owen Wilson would say, he'd say Googa. So Googa is looking really sharp right now, and you can see it's got a nice little trend line, not the cleanest. So let's see if we draw it right here, if it gives us a little bit better. Yeah, that's better. So it's pulling back to this little mini trend line. Let's get rid of these bands here, not known as Bollinger Bands. And so if it can get closer, maybe, you know, you want it to hold that 10-day moving average really, and you know, the closer you can get to 1068, the better. So this is a nice trade setup. I really like it a lot, and worth also considering as well. And so there you have it. You got some great trade setups in Apple and Google. You also have the trade that we took just recently in Baidu, and then some other potentials with KKR, AGCO, and possibly BC. And you know, I don't do videos where I like to talk about my trades, because I try to reserve those for those in the splash zone, you know, without infringing on what they pay. But every once in a while, it's sort of good to provide a little bit of an insight into what we're doing in the share planner splash zone. And I hope you like it. If you guys have any questions, feel free, guys and gals, feel free to email me at ryan@shareplanner.com. If you are in a splash zone, just always hit me up with a question there. I'm in there every day, as is Oscar. We're always answering your questions, so don't be a stranger. I'll respond to your emails. I'll respond to your comments in our chat room. And that's it. God bless you all, and have a great rest of the week.